Hi, I'm here with Tenley. Tenley and I are with the compliance team at A12 Mortgage Corporation. Tenley, introduce yourself.
Thank you. My name is Tenely Kam, and I am the Regulatory Compliance and Quality Assurance Manager here at 812 Mortgage.
Great. Tenley is one of the very first team members of A12. So Tenley, let's start with your journey with A12. Let's talk about like how you joined A12, the journey so far.
Sure. I always call it my accidental career. Prior to joining the mortgage industry, I had worked for one of the bigger banks for almost 20 years.
Wow.
I went into the brokering, always had been with the one bank for every property that we owned, and started to look a little bit differently. At that time, I decided to shop around for the first time ever and had a really great experience with a mortgage brokerage. I wasn't happy where I was in the banking industry. And when my transaction closed with that particular broker, he essentially asked me if there was anything else that he could do for us. And I asked him that I want a job. I want to work with you. And shortly after that, I became licensed. This individual also is a great friend of Gary Fuchs. He introduced me to Gary, had an interview with both Gary and Akbar back in 2019, and was hired as their funding administrator at a time where it was just Akbar, Gary, myself, and then another underwriter. At one location, Kiel, and up in Kiel, and then we relocated to 45 Shepherd, and have been with the company ever since, and had been blessed with being able to take my position with me when my family relocated out of Toronto.
Yeah, it's amazing. So that's one thing I love about 812. It's the opportunity to grow, like within the corporation. There's room for growth. The support that you get all the way from leadership, management, everyone, like every agent, every member of staff gets the same level of support. Like, it's just a great place to actually build a career and grow within the industry. That's one experience I've had. Like, I joined a couple of years after you. I joined at 45 Shepherd. We're now in Markham, like this amazing office we have at Markham. But really, it's been an amazing experience working at A12, I would say.
It absolutely has. And just to watch how it did grow and continues to grow. And when you talk about the support, and how quickly the company itself and the key members just recognize the potential. I started off as a bank teller, and when I left the bank, was in a similar position. And then joining 812, it was just, I continuously improved and was able to take on bigger, more challenging and exciting roles.
Yeah, I totally agree. So I came into Canada like a couple of years ago. I came as an internationally trained lawyer, as a lawyer from my home country back home. And when I started working, I was working directly with Akbar. I would say actually saw potentials in me before I actually saw them in myself. And he believed like, okay, OG, I believe you have these potentials. And it actually helped me grow. And within the few years I've been at 812, the growth has really been amazing. So yes, the support at 812 is really great. Tenley is our regulatory compliance manager at 812. And compliance is something you're very passionate about, that you do very well, if I must say. So let's talk about compliance. Let's talk about files. Let's talk about like deals. When you get a file from an agent, what do you look out for? How do you determine like this file is compliant and then I can audit approve it?
Really great question. And it's something that goes beyond ensuring that things are dated properly or we have proper credit consent from a client. for me, when I view a file and review a file after it has funded, I want to be able to open it up as if it's a storybook. What I want to see is that I know what what their expressed need was, whether it be a purchase or a refinance, but also without having to talk to the agent or without having to communicate with the underwriter. I want to be able to piece the puzzle of that file together, whether it's through the notes that the agent makes, because of course, everything is documented. Conversations that agents are having with their clients is documented. So I'm able to go in and completely understand the whole essence of that transaction, which is critically important. Any gaps in that story it would be a flaw.
Yeah, I totally agree with you, Tenely. So the compliance team at A12, we have a mantra that says document, document, document. We can't overemphasize it because if it's not documented, technically it didn't happen. Like you said, you want to open the file without having to go to the agent or go to the underwriter and then be able to understand the file because it has every information on there. And then, like you did say, why it's very important to keep those notes, to keep every note, like conversations in that file, you can tend to forget. So let's say you work on a file and then 5 years later, the file is being audited by the regulators. If you don't have proper documentation, there's every tendency that you might not even remember the details of that transaction. And if a file gets audited, the regulators, it would be like a great advantage if they pull up a file and then they're able to, just by mere looking at the file, because it has all of those details in it, they're able to understand the transaction from the beginning to the end. Like the reasoning, everything is there, why you reached a decision. Did this client have enough information to make an informed decision to proceed with this transaction? All of those documentation, they're very helpful. Yeah, I totally agree with you that you want to be able to look at the file without having to call up the agent to say, why is this? Why was this? And that helps you reach a decision.
Absolutely. And further to that, I mean, let's hope that no file has to go to a regulator, because we as agents or we as an organization really exercise our duty of care, our fiduciary responsibility. But even before, if it does get to that level, from a customer service perspective, they call in, we have a client calling in on the sales line, being able to seamlessly offer that client comfort in that first initial phone call, rather than saying, oh, sorry, Mr. Client, I have to go and confirm this with your agent. Mm-hmm. The proper documentation is not only beneficial from a compliance perspective, but from a customer service perspective as well. Mm-hmm. It makes clients feel that we do take that extra level of care, mm-hmm. right? Because, and when I talk about the documentation, it's so important that, even if your client at some point had a situation where they weren't well, our system is designed through our notes that I have the visibility to go into that and see, oh, Mr. Client, 3 months ago, was not well. He was, potentially had a health crisis that he was dealing with. It just allows us to take that compassionate side of it and just realize that, okay, let's reframe this conversation that we have with our client, mm-hmm. keeping this in mind, that there may have been a temporary bit of turmoil in their lives.
Mm-hmm, mm-hmm. And yes, you talked about duty of care and fiduciary responsibility of agents and brokers. I totally agree. So as agents, as brokers in the financial services industry, not in all cases do we owe fiduciary responsibilities to our clients, especially in Ontario. There are few provinces, specifically New Brunswick, that because in New Brunswick, like we know, you can't represent both the lender and the borrower in the same transaction. So there they have like higher standards. So at that point, there's like it now goes above just having a duty of care to the interest of the borrower. So even in provinces where you are not you don't have a fiduciary responsibility, there are some exceptions. So let's say you're dealing with a client that's vulnerable. You're dealing with a client that depends 1,000% on the advice you're giving. So in those specific situations, you might then owe them a fiduciary responsibility. But the main baseline that you owe to the client is the duty of care. The duty of care to ensure that you're giving adequate information, you're giving proper disclosure, like you're giving enough professional information to help that client make an informed decision. That's the minimum you owe to the client. That's the best. That's the minimum baseline when we refer to duty of care that you owe to that client. You need to be able to, as a professional, the client is relying on you to direct, to lead them, to help them make a decision. So how much information are you giving? How clear is the information you're giving to this client? Because do not forget, like, a mortgage transaction is one of the most important financial decisions the client is going to make in their lifetime. Either they are doing like a new purchase, they are refinancing, whatever it is. It's a huge decision. So as a professional, when they come to you, you actually owe them that duty of care to be able to give them proper advice, proper information, adequate, full information. So when they are making an informed decision, they know that they have the right information that they are using to make that informed decision. Because if you don't give them proper information, if the information you're giving to them is not accurate, if it's not complete, ultimately it affects the decision they are going to take. Because the decision they are going to take is going to be based off the information you are giving as a professional. Every once in a while, you might have clients who come with a mindset of what they want already. I don't know if you've ever had a situation like that, but as a mortgage agent, as a broker, you do owe your clients a duty of care. You mentioned that, and I'm like, yes, oh, definitely.
Absolutely. And let's talk about that.
Mm-hmm.
Let's talk about what happened 2 years ago when the best rate out there was your variable rate mortgage.
Mm-hmm.
So duty of care in that essence is clients want to come to us for the best rate. But it comes as there's a delicate line there. And when I talk specifically about variable rate mortgages, when individuals went into those variable mortgages, and we answered those calls where the rates started to go up. And of course, with a variable mortgage, when those rates started going up, your payments started going up as well. Mm-hmm. So what does duty of care look like in that circumstance? Because they are coming to us for the best rates. It's painting the scenario. It's painting the scenario and framing the conversation to your clients about how are you going to sleep at night when an interest rate goes up and your mortgage payments goes up by $50. For some individuals, it's not going to have an impact, which means that how you're going to frame that conversation based on how they respond is, well, if you're going to lose sleep over a $50 mortgage payment increase, as a professional, it's my duty to inform you that that is probably not the right product for you.
I totally agree, Tenely. That brings me to suitability. Because a product might be a right product, but is that product the right product for a specific client? So is the product suitable for that client? Because yes, like you said, if a $50 increase is going to give you sleepless nights, then was that product actually the right product in the first instance? Because circumstances changes, things fluctuate. So when you're making a recommendation to a client, it's not just about is the product can be good, the product can be a right product, but is that product actually suitable for that client? Because suitability is very important when you're making recommendations to a client. You have to determine that this product is suitable. So you have to look at a lot of factors. you have to look at the specific circumstance of that client. You have to look at their financial circumstance, their long-term goals, their short-term goals. What are they looking to get? What are they looking for long-term? Is there any changes that's going to happen to like their financial situation in the future? All of these, as a mortgage professional, I believe, are things you need to need to look at. You need to have a detailed conversation with your client so that you're very sure that this product I am recommending, it's suitable. And then you need to properly explain to the client to say, this is why I believe this product is suitable for you. You need to give them like clear information to say, based on XYZ factors that are specific to your circumstance, I'm recommending this product because I believe this product will be suitable for you. So I actually believe that, yes, a product is not just, at 812, we do have access to tons and tons and tons of products, but the ability for you as an agent, as a broker, to be able to sift through those products and make a recommendation to your client amongst all of these tons of products that are available to us. I have reviewed your circumstances based off the detailed information I have received from you, and this is the product that I ultimately believe is suitable for you. This is why I am making this recommendation to you. That way the client is able to make like an informed decision to say, oh, okay, I believe this product actually works for me, and I believe like you've given me enough explanations to help me make an informed decision. So yes, I agree. I totally agree that suitability is very important. So that's why you as an agent as well should actually be familiar with the products available in your brokerage. Because if you are not familiar with the products, if you don't understand the products available to you through your brokerage, then it actually becomes an issue when you're making a recommendation to your client, because you have to understand the product. You have to understand what risk are peculiar to any specific product. How will this impact like the client? You should be able to have that knowledge to be able to give informed and proper recommendations to your client.
Absolutely. And suitability is critical, and it's definitely a word that you and I hear on a regular basis, specifically over the last, I want to say more in the last 5 years, with the uprise in clients needing more alternative lending solutions, whether it be B lenders or our private lenders. But even to go backwards just slightly, how does one determine suitability? Obviously through the mortgage application. But the critical piece is the know your client, the KYC.
Definitely.
And having those heart-to-heart conversations with your clients, because yes, all of our Canadian families want to have four walls. They want to have a roof over their head. But more importantly, as professionals, we really have to understand, and I'm not talking map out their lives, but a typical mortgage transaction, it's a 5-year term. But knowing your client and asking the right questions will, one, determine what type of mortgage product you're going to provide to them, but also in the answers in that KYC form, specific example, maybe your client says that, based in your conversations and getting to know them, which is a part of KYC, they may determine that, they've got children that are going to be graduating soon and off to university. And maybe in that 5-year term, they're going to have to start figuring out how they're going to fund that education. So knowing that, and it really is going to help you determine what type of product, because there may be a time where they will have to tap into the equity in their home to finance their child's education. And knowing what type of product the client, or what type of product you're going to put your client in, is going to determine how affordable it is going to be, and even if it is something that they could potentially do.
Yeah, I totally agree with you. So that's why it's very important in the in the process of doing these transactions with clients, you need to give like adequate and proper disclosure. You need to disclose. So as part of your duty of care to the client, even if a product, so let's say you have two products and then both products, they're suitable, like they meet the specific needs of the client. But so let's say the product with the higher commission to you as an agent is the least suitable one, and the one with like a lesser commission is the most suitable one to the client. Ultimately, your duty of care to that client means that you should first of all recommend the product that best suits their needs and not the one that gives you a higher commission as an agent, because that's a duty of care that you owe to that to that client. And if you're going to make a recommendation based off the fact that, oh, I am going to make the most commission from this, even though both are suitable to you, you should disclose that. Don't you think that should be disclosed? Like if you have two products and both products are suitable, but one is more suitable than the other, but the one that's less suitable gives you, the agent, a higher commission. And then without offering the other product to the clients, you decide to offer them the product that gives you a higher commission.
Absolutely. And it should never be a mystery to a client. A client should know fully what is being recommended to them and the reasoning it has been recommended, whether it be the commission or the rate, or maybe the penalties to break the mortgage are going to be a little bit more palpable for the client to handle should that come up. But I think more importantly, when you talk about that, I kind of look at it from the lens of getting into the mindset, like, is this a product that I would recommend to my loved one? Would I put my father in this product? Would I put my sister? Would I put my best friend in this type of product? So I think you really have to look at it from that perspective as well. I mean, everybody's here to make a living, but if it comes at the risk of harming the client, then ultimately we've failed in our fiduciary responsibilities.
So always the best interest of the client, always the best interest. So that should be like the guiding principle. When you're making a decision, when you're making a recommendation, is this at the best interest of the client? I think that should always be in the mind of an agent as you walk through a transaction for transaction for a client, because I think ultimately that's what the regulators actually look out for. That's so when our industry is like a principle-based form of regulation, so the regulators won't give, especially in Ontario, there are a few provinces where you have like guided rules, but in Ontario it's principle-based. So they give you like, what is expected, how you get there. The regulators are not going to give you like a roadmap, but the end results, we expect X, Y, Z. And in all of these regulations, what they look out for was it to the best interest of the client. So that means when you work on the file, when you process a file, when you are looking at products, when you're looking at suitability, when you're doing your KYC, I believe always have it like in your mind, is this at the best interest of this client? Because ultimately, that's what the industry is looking to protect, to ensure that the interest of the borrower is being protected. The interest of like consumers is ultimately being protected. They know that, and that's one thing that we take very seriously within A12. We are very customer focused. We ensure that as we make recommendations, as we deal with our clients, we always put their best interests first and ensure that whatever mortgage they are getting into, whatever product that's coming from A12 to them, it's usually like the best product for them based on their specific circumstance at that point in time.
Absolutely. And you can look at it too from, we've obviously had repeat clients.
Yes.
So,
And that's how you know you're getting it right. Like when the clients keep coming back, you know you're doing something right.
absolutely. And I reflect on one of my repeat clients. Now, I don't do sales anymore. I'm strictly
Compliance.
compliance, but the transaction that sticks out to me is the 3 mortgage transactions that I did with a client. And it was a journey. So we had the typical consumer proposal client that we had to pay out the proposal. So of course it was a private transaction. Full suitability done to determine that there was a solid exit strategy. I was going to work with him, make sure that he kept his debts, in the norm, build up his credit score. 1 year that private mortgage came up for renewal, we were able to get him into a B lender. So we went from private to B. Again, we still had to do suitability for the B because of court with the alternative lender because the rates are still on the heavier side.
Mm-hmm.
But the great part of that story is that we were able to get him on the A side. So he was and it happened that he sold his property in Ontario and wanted to move on and live in Newfoundland.
Interesting.
So sold the property, approved for an A lender. So when you look at that journey, right, it's one that sticks out in my head the most.
Yes,
right?
so that's the great thing about offering, going over and beyond to offer like very great service, because that service is all of the recommendation you need. That's all like the referral you need. Because if you offer great service, it kind of speak for itself. Like the clients, if like that client, I'm sure if that client has friends, family that wants to, that's looking for services like mortgage services, top of mind, you will definitely come to like top of mind. The company, the corporation would definitely come to mind like, oh no, I had a great service with that. Like they put me in a mortgage that was totally amazing. They helped me move from a private to a B to an A. So that's talking about exit strategy.
Mm-hmm.
In the last few years, we know that the demand for alternative, like you say, private has now like become way higher than it used to be. Because of course, well, we know and understand the climes that we're in, and I think at times agents and brokers kind of get it confused because privates are not regulated, so I actually don't have to do the regular suitability. I don't have to do like those disclosures. The lender doesn't actually need it. Can you pay the mortgage? But at 812, we always say the same way you treat an A file, treat a private the same way. Ensure that you do the proper disclosure. It doesn't matter whether the lender doesn't want that information, but you should, because how are you sure that you're making the right decision? Again, we're coming to suitability. How are you? The clients first off, it might look like this client is only can only get a private, but if you do put in the work, we clearly understand that there are some clients that right off the bat, this is a private, like this is going to be a private deal, but there are some that eventually, if you do put in the work, if you do go over and beyond, like do the appropriate disclosures, KYC, know their specific needs, their goals, what is required, and then you could say, we could actually make this a B. You can't get an A right now, but you could get like a better rate. You could get like better options. So that's why, because I think some agents, some will just assume that, it's a private, it's less paperwork, it's less documentation. But personally, I don't believe that's the way to go. I believe every mortgage transaction, irrespective of if it's an A, a B, a C, a private, you owe the same duty of care to that client.
Absolutely, especially, I mean, private lending absolutely serves a need. Is there an extra level of thought and duty of care that goes into a private transaction? Absolutely. And that's obviously where strong KYC, know your client, really comes into play also. Because, I mean, we've heard all the stories. We probably have many examples of specific reasons that clients have to go into privates. Their only alternative is private financing. What we have to do as mortgage agents when we talk about our duty of care and our fiduciary responsibility, duty of care first is ensuring in very clear, easy to understand language with our clients the risks associated with private lending. Let's talk about the material risks. Let's talk about the risk that, and I mean, let's also say that these are short-term solutions.
Definitely.
They are not meant to be any longer typically than 1 year. So material risks, if you come to us because there was a blip in your credit and your credit score you don't meet the guidelines with a B lender, similar to that story where I just said we take that client on a journey. The risks in being in a private is if we offer the client the clear path on how they're going to fix their credit, improve their credit score, that by the time 1 year rolls around, we're going to be able to get you approved with a B lender. The risk of if they don't improve that credit, then what happens is we pull your credit a year to work on your application to go to the B side, and it's still lower, then there's the risk of not being approved for that particular loan. But even more importantly is, what are we going to do with this private? So when we talk about the duty of care and even our fiduciary responsibility, it's really ensuring that that we've done our suitability to ensure that this is the right product, but that our client clearly understands that there is work to do, and that at the end of that year, absolutely, we want to move you onto the next tier of lending.
Yes.
So just that proper documentation and communicating that in a very clear way that they understand.
Yes, so that's why it's very important that for every private, an exit strategy is mandatory. Like, why are you putting a client in a private where you don't have an exit strategy? So not just like an exit strategy on paper, something that's actually achievable. The conversation you have with the client to say, oh, this is the reason why you're not eligible for a B or an A lender. These are the gaps identified. You're getting into a private. Within the next 6 months, 1 year, this is what you need to do to be able to get into either a B or an A lender. It has to be documented. So you have to have that conversation with the client. The client has to agree to say, okay, this is doable. I can do this to achieve this. So it's not just putting the clients in a private and you move on, and then the private is expiring, and then they're coming back to say, oh, I still need another private, because it's possible that that lender doesn't want to renew. The private lender might not want to renew. They might want their funds back. What if they are not eligible for another private? What if you're not able to get another private? So it's always important that an exit strategy, it's mandatory for every private. You can't put a consumer in a private without having an exit strategy that's actually achievable. So not just documenting something to say, okay, this is what's going to happen. Did you have that conversation with the client? Are they aware that this is what they're committing to? You need to have that conversation. You need to have it documented. The client needs to sign off to say, I am committing to this to be able to achieve this. So at the end of my term, I will be able to move out of a private. So there are some circumstances where they might need to renew with a private, but then, like you said, you need to let them know that these are the risks involved. There's a possibility that you won't get renewed with a private, like maybe not the same private lender. Maybe you have to look for another private lender. Maybe you need to pay higher interest rates. So, an exit strategy is not optional in a private transaction. When a client is going into a private mortgage, it's not optional to say whether or not they should have an exit strategy. They should definitely have an exit strategy to take them, because, like you did mention, it's a short term. It's like a breach. It's short term. It's not something where they want to remain indefinitely. So yes, I totally agree. Like, our duty of care that's owed to a client, in summary, in my opinion, is, as a mortgage broker, when dealing with a client, duty of care means you're honest, you're transparent, full disclosure. Are there conflicts of interest you need to disclose? Are you affiliated to the lender? You need to disclose it. It's possible that the client knows that you're affiliated to the lender. You don't just assume that, oh, the client is aware, so I don't have to document it. You absolutely have to document it. The client has to sign off to say, oh, yes, this is a potential conflict, but I'm okay to move ahead.
Exactly.
Because the client might come to say, oh, no, I didn't know that you were affiliated with a lender. You took advantage of me. You didn't tell me. So that means you're basically gaining off. It was utmost important that when you talk about duty of care, it's basically you being as transparent as possible. You being as honest as possible. You putting the best interest of the client first, and then you giving them enough information to make an informed decision.
Absolutely. And if at the end of that year they are unable to get to the B side and they're having to renew into a private, what do we do at that point? To me, it seems that probably time to do an updated KYC to figure out what happened in that year. Now, a lot of situations, obviously, and I'm not going to go into too much detail, but there are situations where the renewal or getting to that B side is outside of the client's control. And we can kind of talk about, property values maybe being one of them as well. But updated KYC, like every time you do a new transaction for a client, a new KYC should be done. Tell me what's happened in your life, what's changed. Maybe they have a new family member. Maybe they've had to move their parents into their home and are having to maybe one day look at putting in a suite to house those parents, right? So little bits of information like that in a KYC form, critically important.
Yeah, could make a huge difference in like helping the client
Absolutely
make a decision. So let's talk about, so last year the mortgage industry became a reporting entity with FINTRAC. Never used to be. The real estate, yes, but the mortgage industry became. So let's talk about how that has impacted compliance with the added levels of compliance that's required on the FINTRAC side. How's that impacted compliance, like your day-to-day in compliance?
Really good question. And I mean, just to go back a little bit, I kind of look at my career ever since I started in the financial services industry in the early 2000s. So when I look at the timeline of how things have changed, it's obviously it's more challenging to obtain a mortgage now, purely because lender guidelines change constantly. But this newest one, with the FINTRAC guidelines and the AML, let's talk about ID verification.
That's the most important piece, in my opinion.
Absolutely.
Yes, for sure.
Absolutely. So in the day, we were able to collect those two pieces of government-issued ID, and we'd be able to continue on with our file. Now we have the new guideline where not only do we collect the ID, but we have to verify the authenticity of that piece of identification. Where's this coming from? Well, we all know that mortgage fraud has increased year over year.
And I think technology, I'm sorry to cut in, as much as technology is a good thing, I think it has a role to play as well in the increase of mortgage fraud.
It absolutely does.
It's a cost and a blessing.
It absolutely does. I mean, you can obtain fake identification. So how does one determine if the ID that you've received is authentic?
Mm-hmm.
And it's good, like to the naked eye, you really can't determine if it's been manipulated in any way. So one of the newer regulations, we collect the client's identification, we have it on file, but a step further, the client we use a third-party provider where our clients are sent a link. They're invited to upload their government issue photo identification, and then the client has to take a series of photos. So essentially behind the scenes, it's determining your facial features if it matches the ID that was presented. But also what I find really fascinating about this is that when we get that report back for the identification, it can pinpoint what part of the world this particular client is in, and that could be another conversation. Mm-hmm. But it's cool in the sense that, I mean, first of all, we're having to do this. We have to go through this extra step. Mm-hmm. But it's peace of mind. Mm-hmm. It's peace of mind for all of our clients, knowing that and it's an added step. It's an added step to the mortgage process, but it is an important one. I know. And it's a way that we protect our clients from mortgage fraud, identity theft in particular.
Mm-hmm. I can imagine, like, when this came into force last year, there must have been some pushback. Like, clients would say, oh, I have to, like, the lawyer, this is done at the lawyer stage, this is done at the back, why do I have to do it again? I can imagine that must have taken, like, lots of explanation. I think it's been a while, so everybody now understands that this is a requirement and it's actually for your own protection. But like the first few months, with all of there must have been pushbacks. Like, do I need to do this? I'm not tech savvy. Oh, the link is not working. I'm sure there must have been like a little bit of glitches or probably pushback from clients not wanting to do that additional layer. Because I know compliance most times, especially in is a good thing that at 812, our compliance team and our sales team, we have like an amazing working relationship, because most times some sales team will see compliance as a stumbling block, like a roadblock. Why do I have to do all of these steps? But because we take compliance very serious at 812, we know that as much as we want to drive sales, we want to do the right way. So we need to ensure that every transaction we're doing has the compliance built into it, so it's done properly. So the client knows that right off the bat, we're taking you through the right process. So if you need to do this step, it's not because we want to give you additional work, it's because we want to better protect you and want to ensure that we're keeping with regulations so that your transaction is not questionable at the end of the day. So compliance and sales they need to have like good relationship. They need to be able to collaborate for the transaction to go smoothly. So compliance is not just like a paperwork. So let's just check this list and get it done. Or it's a stumbling block. Do I really have to do this? Getting to that level of understanding to know that we need to collaborate and work together, because as much as we need to drive sales, we need to ensure that we're doing it the right way, because that way you build more integrity within the industry. You know that, okay, this file, even if it's, no matter how long it takes, if it ever gets audited, you have that, like you said, that peace of mind to know that everything was done right.
Absolutely. And every time a new process, a new regulation is rolled out, we do educate everybody. And it comes with the reasoning why certain things are done, why things have changed. And again, I go back to that timeline I mean, I bought my first house in early 2000s as well. The process then is completely different than it is today. And that's a lot of feedback that we get from our clients. Our clients will talk about, back in the day when I bought my first house, it was done in 2 hours. But the moment that you educate, whether it's your agents, your referral partners, and more importantly, your clients, they take comfort in that. They take comfort in the explanation and the reasoning behind it. I mean, in compliance, we're not here to prevent your files from funding. That's not what we're here for. We're here for the client, the agent, our referral partners, and for our company. So when you look at it from that perspective, and how you communicate that, like you can't over communicate these types of changes. And I mean, still to this day, we're having phone calls with clients, with even agents who are trying to understand this new process of ID verification.
Absolutely. So I have a question for you, Tenley. Seasoned brokers in the industry, one word for them with regards to compliance.
Seasoned brokers, never to stop learning.
I agree.
You may think that you know absolutely everything, but the moment that you stop learning and sit back and flow with what you think you know, then you're going to get lost in the shuffle. And I will talk about AML ID verification being one of them because seasoned brokers, again, I'm going to go back to the story of things being completely different than they were 20 years ago. So each and every day, we get emails from our lenders with updates on policies, new broker kits. Like I absorb those new broker kits, anything new that's being passed down by our lenders and shared with our agents as well. So I would, every single email, whether it be through Mortgage Professionals Canada, any SIMBA, reading up and staying on top of what's new, what's coming, what we foresee. I mean, FISRA is a great example, reading up on their guidelines. You can't stop.
I totally agree with you, Tenley. Like, you can't stop learning because the industry, it evolves. Like, even with, I know you talked about lenders, even regulations changes. Like the regulations, they might update it. So what the process that happened probably a couple of years ago might be different now from what's obtainable in that province. So you have to keep learning. So that's another thing like we're great at 812. We keep track of these regulations. We are like, as soon as they come into force, we update our policies. We have like a resource center with tons and tons of information, data that you can always, so you can't stop learning. I agree with you. You can't stop learning. You have to keep up. You have to ensure that any information that's put out there, update yourself. Because that's how you grow. You have to update yourself. The process that worked probably a couple of years ago, that process might not work again in 2025. So you need to keep up. You need to constantly learn, constantly keep up with the industry, what's obtainable in the province where you're licensed. Because as much as this province has, they do have similarities, there are like differences as well. Mm-hmm. What's obtainable in Ontario might not be obtainable in BC. So let's say you're licensed in Ontario and then you go get licensed in BC and then you say, oh, okay, this is how I did business in Ontario, so I'm absolutely going to replicate it in BC. It might not be exactly the same thing. What is not a contravention in Ontario might be a contravention in BC. So that's why especially if you're multi-licensed, you can't stop you can't afford not to continue to update yourself, because a policy might not change in one province, might absolutely change in another province. I remember when I told like agents within our organization that in Ontario, it's absolutely fine to represent the lender and the broker. In New Brunswick, it's not.
Mm-hmm.
So I know a couple of agents who are like, oh, really? I'm like, yes. It's not just an 812 policy, is what the regulation says. You cannot. So that's why you have to keep updating yourself, especially if you're multi-licensed, because you can fall into that comfort zone to say, oh, I understand what happens in Ontario, so I think I'm good if I go get licensed in BC or Nova Scotia. They have like a lot of similarities, but there are some nuances that you have to absolutely look out for. If you're multi-licensed, even if you're licensed in one province, look out for updates.
Yes.
At 812, we have monthly newsletters that we put out. Read them, because those newsletters, they contain updates within the industry and within our brokerage. That's why we put out those monthly compliance newsletters, is to help keep you informed, like keep our agents and brokers informed if there are updates. So we take off the pressure of you going into the regulatory provincial website to go dig out this information. We make them available so that way you can stay up to date if there are any updates. Because FISRA, for example, the FISRA website, a lot of people don't seem to take advantage of that. There are tons and tons and tons of information on that website that makes it especially for new agents coming into the industry. This regulatory website has tons of information that will enable you to start off doing deals the right way.
Absolutely. And further to that, reach out to your regulators. Specifically, I have to shout out to one of our new compliance officers, even with RICA, our Alberta regulatory office. Fabulous, fantastic. Like, they're there to help. So first of all, agents, if you're confused about any of this, the first step would be to connect with compliance.
Compliance, absolutely.
We're here to take your calls, your emails, help you understand,
Always.
walk you through the process.
Always.
Because the content is great on the regulatory website,
but it can't get overwhelmed.
it
like
can,
you can get
yes,
overwhelmed.
yes.
So that's where the compliance team of the brokerage comes in. Like, we break it down and let you know, like, this is what you're meant to do. I agree.
Yes.
It's been so nice chatting with you, Tenely.
It was wonderful.
Thank you. We'll do this again soon.
We absolutely will.